Nonprofit D&O, or Directors and Officers Liability Insurance. What is it? Why do you need it? What does it protect? And how do you get it? I'm going to answer these questions and more in just a moment. Hi, I'm Gordon Coyle. Welcome back to my channel where we talk about the risk and insurance issues on the minds of business owners and nonprofit organizations. Let's start off with an understanding of what D&O coverage is all about and what it's intended to do. Whether you're a for-profit or a not-for-profit, D&O, which stands for Directors and Officers, is a form of liability insurance intended to cover the leaders and decision makers of a company or an organization from claims which may allege a wrongful act. A wrongful act is really mismanagement, miscommunication, misleading communication, and a failure of the decision maker to lead the organization in a faithful and diligent manner. In addition, D&O policies are often broadened to include protection from claims alleging wrongful employment acts with employment practice liability insurance, sometimes known as EPLI protection. Issues that arise under the EPLI portion of the policy will often include wrongful termination, harassment, hostile work environment, discrimination, and so forth. The biggest threat of these types of lawsuits is that they name the individual director or leader of your organization personally for their acts, which puts their personal assets at risk. For nonprofit organizations, D&O protection is critical to protecting the board members who are volunteering their time, talent, and often treasure to the mission of the organization. And as I just mentioned, they're putting their personal net worth on the line for the organization. So protecting them with the best D&O coverage is critical. Now you may be asking, doesn't a director's personal policies cover them for these types of claims? The answer is no. A director's homeowner's policy or personal umbrella policy will not cover them from claims that arise from their service on a for-profit or nonprofit board. What about directors who may own a business or work for a big company? Does any of their business policies cover them for their services on a nonprofit board? That's a good question. If a board member owns a company or is an executive of a company and they have their own D&O insurance, there may be an extension of coverage under that policy to cover them for claims which may arise from their service on the nonprofit board. This coverage is known as ODL, or outside directorship liability. And there are some conditions and deductibles to this protection, so careful consideration should be given before relying on that policy. What are the risks of serving on a board? Do claims actually happen? What kinds of claims do arise? Every organization is going to face different types of risks, and the magnitude of risks are going to differ. But here are some common claims filed under D&O policies that include EPLI coverage. The first one is claims for allegations of financial mismanagement. Claims can be filed by donors, beneficiaries, and other stakeholders. Second, wrongful termination, discrimination, sexual harassment, and other employment-related actions. Third, breach of fiduciary duty, failing to uphold a director's responsibilities in driving the mission of the organization. Fourth example, failure to comply with laws and regulations. Here the common issues are putting an organization's nonprofit status at risk very frequently. The next one is misrepresentation. Claims can include misrepresenting the organization's mission, financial status, impact of programs, etc. to donors or the public. Next one, conflicts of interest. When a director is perceived to have a personal interest that conflicts with the interests of the organization, potential claims may arise. And finally, failure to supervise. This involves claims that directors and officers have failed to adequately oversee operations or employees, which leads to reputational or actual harm or damages. These are only a few of the types of claims that can occur in a nonprofit. And before you think, well, that'll never happen to us, it's critically important to understand that it only takes one bad apple to do harm to all the directors and officers and trigger a claim. Secondarily, even if you can extricate yourself from situations like these, it's going to be expensive, and that's where the D&O defense expense coverage will come into play. In addition to paying for lawyers to defend you, D&O insurance will also pay for jury awards and other settlement costs. Okay, so I've identified all the ways that things can go wrong. So how do you make sure you're getting the right protection at the right price if you're looking for D&O insurance? First, it's important to understand that not all D&O policies are created equal. D&O is a non-standardized form of insurance, so every insurance company's policy form is different. The best advice I can give you is that you should work with an expert in this field and not rely on a generalist insurance broker. Sure, the local broker that's insured a small nonprofit with a tiny budget for years may be okay. But for larger organizations with a lot of moving parts, buying a D&O policy off the shelf could be dangerous. Again, please remember, we're talking about putting the personal net worth of your volunteer directors and paid staff at risk here for the organization. They deserve the best protection, which is typically found by working with a skilled broker who understands nonprofit D&O, which I'm happy to say, of course, the Coyle Group is. We are a major producer of D&O insurance and have access to a wide variety of insurers in this space and can help you and your organization make a more informed decision about D&O protection. I'd love an opportunity to speak with you. My contact info is in the description box below. Give me a call or drop me an email and we'll arrange a time to speak. Thanks for watching, and if you found this video helpful, do me a favor and hit that like button. Thanks.